Hi traders and welcome to the Technical Analysis Market Wrap on Friday the 3rd of September. So it's non-farm payrolls Friday in the US, so we're going to see some relatively low movements until we actually get some numbers out, but we'll find ourselves at key support and resistance zones on a lot of the majors as we would probably expect. So we'll jump straight into the markets and see if we can identify any trades for today and early into next week. So we'll start out here with the Aussie USD. Straight into the 50 moving average and also at a very strong level of roll reversal. So it's at the 74 flat basically. So if we draw a horizontal line right at the level where it's at, you can see that this is obviously a very important level. You can see that it was resistance right through there. Found a little bit of support when it broke through there, and here it is there, finding it very difficult to get through once it did actually break down that level. Now, it did actually follow the 20 moving average down here on the daily, but now it's broken through the 20 moving average and it's testing the 50. So it's a very, very strong zone for it. And we know the 74 level is a very important level. So it probably heeds a bit of a warning that it's going to have a little bit of trouble getting through this level on the first go. You can see that it is definitely pushing up into an uptrend. I mean, it's gone up fairly quickly, but you need to go to the smaller time frames to identify a potential change. Here's the 4 hour. You can see that we've got higher highs and higher lows all the way up, but you can obviously see that it's a very strong area. So really probably the trade here is probably to reverse it back to the 20 moving average, which is around this level here. So if we draw another horizontal line here, this is the level that you would expect it would come back to relatively easily. You can see that we've got a lot of market action right in between these two zones. That's around that 73.30 level, so about a 70 pip zone, which is pretty good. When you go down to a 1 hour chart, what you're looking for essentially is to get back to this level around here. So what we want to do is wait for the weakness to kick in. Like, it's still hovering above there at the moment, so it's given us no signs yet that it's going to continue on the way up, but also not on the way down either. So I mean, it's basically flatlining here. We need evidence. If it pushes up, makes a new high and gets past the 74.20, then maybe that level is broken and it's not going to respect it like we expect, which is a trade in itself. But the trade we're probably looking for is the short from this area here, and we want to see a change of trend on the 1 hour, probably 1 hour as a minimum on this one, because it has been a pretty strong move up. You can see that the 20 moving average has basically provided a really good level of support all the way through on the long here. And every one of them was a pretty good trading opportunity, especially this one here. This was really good. So, but what it has done now is flattened out. So what we're looking for is a change of that. We want a lightning bolt to the downward direction, so a series of lower highs and lower lows on the 1 hour. We want to see the 20 moving average well and truly broken for 1 hour candle, and then this is the level that we're aiming for, that 73.30 level. So, you're probably going to get 40 or 50 pips on a scalp, which is not too bad. It might meander on down there with a little bit of weakness throughout the session today and early into New York while we're waiting for non-farms, and then we'll wait for that direction and see what the US dollar strength does, because of course it's going to affect all of these pairs. All right, we'll move over to the US dollar CAD now. This one's showing it's definitely been a little bit weak this week. You can see that it's finding itself though at a very strong base, pretty much the opposite of the Aussie. You can see that we've got very strong support here. It's broken through and it's pushed all the way down. It is trading below the 20 moving average, but it is sitting right on the 50 and on the 200 moving average on a daily, which is a pretty significant level, and also bolstered by the fact that it was previous support as well. Okay, so that 125.50 is a pretty strong level. We need to take it to a smaller time frame to really identify what's going on here. I'm not so sure this is going to do anything until we get some results this afternoon or tonight. So realistically, this is probably one that you want to maybe watch and set an alert for. For mine, it can definitely go shorter, but it needs to break down past the 50 and the 20 moving average. That's a pretty tall order for it. It's got a lot of work to do before it does that, but you can see that MACD divergence is definitely on the way down on a daily. So unless the dollar strength kicks in very, very soon, this is going to break down this 50 and 200 moving average, and it's going to spell a bit of a sell-off on the US dollar CAD, which is going to project it down to probably the 124 in the first instance. That's the first support zone that's going to find. You can see that it corresponds with these support levels here, but again, it needs to break down. I wouldn't be taking that trade unless the daily closed below the 20 and the 50 moving average. So the dollar index will tell us a little bit more about what's potentially going to happen here. So yeah, this is one that you can definitely say it can go both ways, and I wouldn't be concerned either way. I'd be happy to take both trades, because if it does reverse from around here and start to print higher highs and higher lows, especially on a 4 hour chart, that would be all that would be required. I'd be quite happy to get involved in this and start sending it long again to the 127 and 128 zones. So set your alerts on either side of this little mini range, and whichever way it decides to go is a reasonable trade. Just wait for the lightning bolts and you'll be off. Okay, US dollar yen is basically doing nothing. Again, pretty much the same place that it was last week when we did the Friday wrap. As you can see, moving average is completely flatlining. We've had massive wicks throughout each of these trading sessions. You can see that they are literally running horizontal moving averages, doing absolutely nothing, all but impossible to trade. MACD is basically at zero. You can see that there's no histogram action, which means the 12 and the 26 are basically doing the exact same thing as the 50 and the 20. So nothing to see here. It's even difficult to scalp. I mean, you go to the smaller time frames, there's just nothing happening. Okay, so this is just one. Until it breaks out of this zone, there is just nothing to do here. Okay, so if we do get the break out of the zone, we'll be able to trade it either side. I'm not fussed either way. I think it can go down to the low 1.9s and 1.0 high 1.8s just as easily as it can go to the 1.11, but it needs to actually prove it. So it needs to do something. It needs to basically see a series of higher highs and higher lows on probably a 4 hour. I wouldn't be taking anything shorter than a 4 hour just to make sure that we are actually getting the movement that's required to get this thing going. So definitely good potential, but we want to wait for the signal to get a high, higher low sequence on a 4 hour to determine the direction. But as it stands, not even good scalping opportunities. There's just simply nothing here at the moment. So we'll move on over to the US dollar or the dollar index now. You can see here that we've got the weakness. It's broken past the 50 moving average. The support zone that was basically holding it up is still there, but it is down below the moving averages now, which does concern me a little bit. There's no question about that. There is MACD divergence here as well, which is, a little bit of a concern. It is a concern for the dollar index. There's no question about that. It is starting to show those signs of weakness. This is the last line of defense, and we say this a lot because, realistically, you can see here how strong this support level was on its way down. It did basically capture that big fall. It stopped it from progressing for quite a bit before it actually finally broke through. And right through here, it provided support again. This is a daily chart, okay? So this is a pretty serious chart. It's not like we're on a small time frame. The level is serious. This is basically the 92 zone. If it breaks down past the 92, the shorts will really start to kick in, and you can easily get down to these levels around here, around the 91. Just low 91s and probably high 89s is the level it's going to be probably targeting. The last line of defense, of course, is the 89-80 area, which is around this area here. I'm not saying it's going to do that anytime soon. It's just that that's where it will go if it starts to break some of these key levels. So this is a very, very important zone. The problem for it now is that it is at support, but the moving averages are bearing down on top of it now. So when the moving averages, the key ones like the 20 and the 50 are around this level here, it does provide for a little bit of a problem when it does go up because there is resistance right in its face. So the minute you take the trade, you're going to be in a little bit of trouble straight up. So it causes... it does cause issues. I'm a lot happier when the moving averages are below it on a support level. So for me, what this requires is a change of trend on the 4 hour as a minimum, because it is a very important support zone. As you can see, it's well and truly tracking down at the moment. So there's no even inkling of it going to go high at the moment. But in saying that, if it's going to turn around, this is the level it will turn around from. It'll reverse this and it will start printing higher highs and higher lows, which will be great. If it does that, we'll be off and running to around the 93 and 93.50 again. If it can do that fairly easily. But of course, to do that, it's going to get above the 50 and the 20 moving average. And that's really, really important for it. So it's a bit of a wait and see. I think it's going to find support here. I don't think it's going to do anything until until we get the non-farm payroll numbers out and the market decides which way it wants to go. It can bounce either side. I'm not fussed either way. I think I would take the long probably with a little bit more preference than the short, because I think it makes more sense here. If this support level holds up and gets past all of these moving averages, I think it provides some pretty good trading opportunities to go long. The short side is there as well, but in order to do that, I'd be waiting for the break of this zone and then a retest. I wouldn't be taking the first break on this one, especially on a 4 hour. I'd be waiting for it to come back and retest it from below, really confirm the role reversal zone, and then start looking for the shorts. And of course, that's going to have the opposite effect on the euro, which we'll go to now. So the euro is doing the exact opposite, of course. You can see that it's pushing up higher. It's pushed past the moving averages, but it does find itself at resistance, just like the dollar index is at support, of course. So it's got work to do as well. But in saying that, what you're finding here, which is different to what the other one is doing, is it's got the moving averages behind it. So even though it is at a resistance zone, if it does come back and find a little bit of, pull back to the 20 and the 50 and finds a bit of support there, it's at a very important zone that could continue longer, and it's got MACD divergence in its favor. So there is a lot going for the euro in that regard. You can see you got divergence. That's class A bullish. Okay, so that's pretty important in itself, and the momentum is well and truly with it. So looking at this, you would say if that dollar index fails to hold at that support level, this is going to push up higher, and it's going to push up higher fairly quickly. So you could easily see this getting back to the 120 zone, which is the target that you would be aiming for on this particular trade. In a perfect world, what you want to see is a pullback down to these moving averages, the 20 and the 50 crossing, a pullback to that level, and then the momentum continuing on to the 120. So that's the ideal trade on the euro. Failing that, if it does hold, that the dollar index holds at that level and starts to long from there, this is going to reverse, and the levels it would be going down to is around the 117 again. So you can see this level here. All that support right through there, and right through there is where it will be targeting, which is around that 117.50. So you got trades on both sides, but in order to go short, it has to close below these moving averages on the daily. That is the only short you would be accepting, because it needs to prove itself on the bigger time frames. All right, the last one we'll have a look at today is the Aussie 200. This is, this is an interesting one because it's basically done nothing for 2 weeks. We know this. It's hovering around this level. It seems to have found the 7,500 level as its base. Hasn't been able to break past the 50 moving average, but it's certainly interacting very, very strongly with the 20 moving average. So this is an interesting one because realistically, you can make a case for both sides. We are in a seasonal weakness time. September is seasonally weak for the Aussie index in particular, mainly because it's dividend earning season. And of course, when the dividends come out of the stocks, the prices drop. The level of the dividend in a normal situation. So what you're going to see is natural progressive weakness throughout the index, because of course they're made up from the stocks. So knowing that we're in a weaker time of year, we would probably expect that the short's more prevalent than the long, but at the same time, it's doing absolutely nothing. It has done so. It's hovered in a very, very tight range with big wicks for the best part of 3 weeks now. The obvious targets are the previous high, which is around that 76 sort of 20 area. That is not the preferred trade, mainly because of the seasonal weakness that we're expecting. So even if it got up there, I don't know if it'd get up there with a lot of conviction. The short is probably the more targeted move, because we know that there's seasonal weakness, and there's also a reason for it to drop with all of the dividends being paid out, of course. So we know we've got more reason to go short than we have to go long. But in saying that, you got to trade what you see, and if we get a break, close above either of these levels, I think you'd be quite happy to take a move long to the 76 with a little bit less conviction than a short down to the 72.50. This is the preferred trade. I'm relatively confident that we're probably going to see a move down here in the next few weeks, just simply because of the natural progression of September. But in saying that, I wouldn't be taking any trades until we get a close below the 50 moving average. We want to see a daily close below this 50 moving average before we get serious on a short down to the 72.50. That is the only trade I would be taking on this. Even scalping is quite hard on it because the range is very tight and it's difficult to get a good move on it. So definitely one to watch. One you want to set your alerts for on both sides of this mini ugly channel. You can see the price action is quite congested in there, but it is wicky. If we get a daily close above either of these two lines, the obvious long is the 76 and the obvious short is around that 72.50. Both have got a little bit of work to do, but they will be good trades when they do eventually break through. So just set your alerts and keep an eye on that one. So I hope everybody's had a great week's trading. It's been an interesting week because we haven't had any really, really big moves, but you certainly, if you're scalping like we have been doing for the last few weeks, you certainly would have got some good positions in. So wait for the non-farm payroll numbers tonight, and we'll see if that starts to break out some of these majors. We know that a lot of the majors are at very important role reversal zones, so a positive number or a negative number, whichever way they want to play it, we'll see hopefully some trends start out of these key zones, and we should get some good trading again next week. But we'll keep it scalpy until we know we're in confirmed trends. Have a great weekend, everyone. I'll see you all next week.